for me, I don't have the conviction, I don't have the faith, if you will, in the powers that be, nor do I have the faith in corporate America or Wall Street to put my money at risk and just buy and forget. So I cannot use that option. That's not something that I can do. Now, I can buy gold and hold, right? I can buy silver and hold. I can buy other kinds of assets and hold. But when it comes to stocks or ETFs, that's not something I feel comfortable just buying and forgetting because, again, we live in a very treacherous and over-leveraged society.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. Founded in March 2012 with the goal of providing the lowest cost bullion available, SD Bullion has become one of the largest US-based precious metal dealers and is regularly recognized by Inc. magazine as one of America's fastest growing companies. SD Bullion continues to gain industry market share by being one of the premier low-cost options for physical precious metal bullion buyers and sellers. At SDBullion.com, you can order your guaranteed physical precious metal bullion products online, 24 hours a day, 7 days a week. Discreet, low-cost delivery is both fast and always fully insured. We are committed to being your trusted source for low-cost, highest quality investment-grade bullion products. Visit SDBullion.com for more information.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and back with us today is Christian economist Jerry Robinson from Follow the Money. Jerry, thank you so much for joining us today.
It's great to be here. Thanks, Elijah.
All right. Now, the first topic I'd like to discuss is about trend trading. You had a video up about a month ago about this, and really, it's a really interesting thing to get into if people have the guts to do it, right? And it's a way that, a lot of people have made extra income doing this, but it is very difficult. So can you give us a bit of background about what trend trading actually is, and how is it different from buying and holding stocks?
That's a great question. So Elijah, I've been what you call a trend trader for quite a long time. It's almost embarrassing when I think about how long I've been trend trading. It's really quite something. I kind of cut my teeth on trading back in the late 1990s. So that was whenever I first kind of got exposed to trading and investing. And I actually tried my hand at trading back in the late 90s, and it was quite a ride, because that was, of course, the dot-com boom, and then, of course, the bust. And so that was a real challenging kind of time to be trading, but it was also very exhilarating. And in essence, I learned fairly early on that the stock market was something that was extremely dangerous. But at the same time, I also understood that if you had knowledge, if you understood what you were doing, if you could learn how to read a basic chart, if you could understand price and volume, these are the things that you see on a stock chart, that you could actually begin to not necessarily predict the price, but you could trade with the trend. In other words, the stock market and stocks in general, they all move in one of three directions. They can move up, where everybody knows that. They can move sideways, or they can move down. And what most investors and most traders do is they approach the stock market with an opinion. So they'll say, okay, I think that the stock market is going to go up, right? And then they buy stocks, and then stocks don't go up, and they say, well, it doesn't work, it's not good for me. Or they may say, I think that stocks are going to go down, and they short stocks, and then stocks go up, and they say, well, this isn't for me, this doesn't work. And that's really a shame, because the stock market is something that you can learn. It's just like anything else. And the stock market is really, quite frankly, a reflection of the expectations that investors have. And so if investors have expectations that things are going to go up, then you tend to see that happen. But they're also a reflection not just of expectations of investors, but specifically earnings expectations. And so you can approach the market in several different ways. You brought out buy and hold investing, and I think personally, for me, that's not something that I'm interested in. And the reason is because I understand from my limited understanding, who really understands this global economy. And I've been studying it for a long time, and I still can't quite get my arms around how the whole thing operates. I don't think anybody fully comprehends it. But from my limited ability to understand what's going on, I have the sense that we're wildly over leveraged. I have data that suggests that. And so I don't think that buying and holding right now would probably be the very best strategy for me. Now, it may be for somebody else, but for me, I don't have the conviction. I don't have the faith, if you will, in the powers that be, nor do I have the faith in corporate America or Wall Street to put my money at risk and just buy and forget. So I cannot use that option. That's not something that I can do. Now, I can buy gold and hold, right? I can buy silver and hold. I can buy other kinds of assets and hold. But when it comes to stocks or ETFs, that's not something I feel comfortable just buying and forgetting because, again, we live in a very treacherous and over-leveraged society. So trend trading actually is very complementary to my particular worldview because I am concerned about the future, because I don't have a whole lot of faith in the stock market or in the powers that be in Wall Street. I find trend trading to be fantastic. So what trend trading basically is, and this is going to sound terribly simple, but this is really how simple it is that I buy what is going up and I sell it when it starts to go down. And that, I know that sounds ridiculous, but that's exactly what trend trading is. And it's been working for me for a very long time. And so what we do is we have created different algorithms and whatnot that help us identify when a stock or an ETF or an industry or a commodity or a currency or a country or on and on and on, when that enters a new uptrend, well, then that becomes a buy signal. And what I do is I don't just pile in all my money because it formed a new uptrend. I scale in. It's known as pyramiding. It's something that the world's greatest stock traders have taught, or not taught, but have done, actually have practiced over, the last several decades, over the last century for that matter. And so I pyramid into positions. I scale into positions. And then, of course, once it reaches my target, or once the chart and price and volume begin to give me information or an inclination that things are not going to continue that direction based upon my reading of the chart, then I may begin to start taking gains. I'll certainly start taking gains if the stock or ETF tops out and then begins to come down and then lose its uptrend. So I view the stock market in terms of uptrends and downtrends. I don't really care about bear markets and bull markets or any of those other kind of lingo. It's really more, to me, the market is either in an uptrend or it's in a downtrend or it's not on a trend at all. Sometimes the market, in fact, the majority of the time, the market is just trading. It's just going sideways. The market right now, in fact, is kind of in a sideways grind. If you go back to the beginning of 2018 and look at the stock market over that time, you'll see the stock market, though it's been up wildly and been down wildly, it's really gone nowhere whenever you look at the point A, point B. And so, so trend trading is certainly different from buy and hold investing. We've all seen the what if kind of mountain stock charts that show us how much money we could have made if we bought shares of, say, Apple or Netflix or Amazon or Starbucks or Nike or McDonald's. You can certainly go back and play the what if game. But the truth of the matter is most investors don't buy and hold. Instead, they buy and they hope. And as soon as their stock runs into trouble, as soon as their stock nosedives, they typically sell out either at or near the bottom, only to purchase the stock again later once it has recovered and is probably, getting ready to turn over again. So if the buy and hold strategy works so well, then why do so many investors fail to beat the performance of the S&P 500 each and every year? So in truth, most buy and hold investors attempt to time the markets just like I do, except they tend to get out near the market, or they tend to get out near the market bottoms, and they tend to go all in near the market tops. And so, again, I think trend trading really has a lot of value. And I think especially for those who are concerned about the future, they realize that the market could go down. Trend trading doesn't require you to stay in the stock market during a downtrend. You can either get out of the stock market during a downtrend, or what's even more cool is that you can actually buy into the market as it's going down, and you can actually buy inverse ETFs, or you can short stocks, or you can buy put options that will allow you to make lots of money on the way down. Perfect example, Jesse Livermore one of the greatest traders who ever lived. He shorted the 1929 stock market crash. He saw the market top. He saw a classic topping formation on the chart, and he began to short the markets. By the time the crash was over, Jesse Livermore had made $100 million, which in today's terms would be close to $1 billion in profit from the stock market crash. Now, you don't hear about those kinds of things too often. You tend to hear more about how everybody loses money in a stock market crash. But in reality, when you're a trend trader, it doesn't matter if the market goes up or if the market goes down. You can make money on either way.
Definitely. And when it comes to these trends, it's more than just that the stock market is going up or down. There is kind of within a trend, you can also have little mini trends, and you can have trends within those trends. And you talked about in the video how there's really three trends you look at. There's the primary trend, the main trend over time, and then the intermediate trend in the short term. Can you discuss a bit of this?
Sure. And let's just simplify it even further. I mean, so when you're looking at a stock chart, and by the way, stock charts are something that, I think it's the foundation, pardon me, for a trend trader is to look at a stock chart. And so if you're kind of analytically challenged or if you're technically challenged when it comes to those kinds of things, it's really okay because a stock chart is really simple once you learn how to look at it. Most people have seen charts. They've seen, a chart of gold or a chart of the US dollar or silver or some stock over time. But what the trend trader does is he really drills down deeper onto that chart and he looks at that chart in multiple time frames. And so the most powerful view that you can get from a chart is a monthly chart, at least in my opinion. And that is what we would call the long-term view. So when you look at a monthly chart, you're looking at monthly data of the stock. And so the monthly chart will take quite a while to turn around. It's kind of like a Titanic. It's a really long chart, lots of detail. It covers a lot of time. And so the long-term view, if you will, it relies upon the monthly trends for longer-term investors. I think even long-term buy and hold investors would benefit from looking at a monthly chart when trying to identify their entries. And in fact, we have many members who are not even traders who simply use our service to enter stocks to see what they look like on the long-term view. And we have a long-term view in our software. And so you can see, is this stock currently in a downtrend, or is it in an uptrend, or did it just recently enter a new uptrend? We have a lot of members as well. I'll say this, but we have a lot of members as well who subscribe to a lot of newsletters like Stansberry or, what's some of the other ones, the Palm Beach letter. I'm just thinking all these different newsletters because we get comments from our members who will say, hey, I subscribe to this newsletter and then I use your charting service to be able to type in and see, is now entering a new uptrend or a downtrend. So it's very, very helpful for that purpose. So the monthly is the big one. But then there's also weekly charts. And if you're a position trader, and that's kind of what I tend to do, position traders tend to get into stocks or ETFs or currencies or global markets or whatever for a period of anywhere from a month to say a year. And I've held positions longer than that as a position trader, but really that's kind of what it is. And so, for that I use weekly charts. And then there's also swing trading. And swing trading is where you don't even really want to stay in for a month or two. You just want to be in the stock maybe for a period of, 5 days to maybe a couple of weeks or so. And that's what you would use a daily chart for. We teach our members to use daily charts with their swing trading, and not the only chart that you'll use. I'm being very generic here, being very general when I'm speaking, just keeping it very generalized. But there's also one more view that you can look at, and that's an intraday view of the chart. And that's really for day traders. I'm not a big day trader. I used to do a lot of day trading. It's very stressful. It's a difficult way to make money. You can make money consistently with it, but you also lose a little bit of hair, right? It really kind of gets into your blood. And I've never really met a day trader who can survive that kind of lifestyle for a period of longer than just a few years. It can really burn you out. So we don't really focus too heavily upon day trading. We have a lot of day trading strategies that we teach, and certainly we have a lot of day traders who use our service. But me personally, I tend to be a swing trader and a position trader. And for that, I would use a lot of daily charts and a lot of weekly charts.
Now, a lot of people who are listening right now are really into holding gold and silver, and they might be a bit skeptical about the stock market, think it's overvalued. What is your perspective on this? Do you have to like the market in order to trade with it?
No, I mean, like I said, I personally don't have an affinity for the U.S. stock market. I don't trust Wall Street one lick. I don't trust the financial media one lick. I don't trade with CNBC on in the background. I don't. In other words, I have a very different kind of view. In fact, what I look at almost primarily is just simply price and volume on the chart. It tells me everything I need to know. I don't spend my time digging through all manner of news. I don't spend my time on blogs and looking for the latest headlines. By the time stuff shows up on a headline in the news, it's too late. And even if it's not too late, you're just chasing your tail constantly. So we don't trade based upon that. We look at the actual charts themselves, and they tell the entire story. The price and the volume cannot hide anything. It tells you everything that you really need to know, in my opinion, by looking at the chart. So, yeah, and I'm with you. I mean, I'm with your listeners as well on that front, and the fact that I agree. Gold and silver, we in fact just recently called new uptrends on both of them just a few months ago, and they've really been doing well. We called new uptrends on gold mining and silver mining for our members, and they get those alerts by email as soon as it happens. And so they're able to kind of follow along with us and see. We called a massive uptrend in palladium back in 2016. It's up like 120%. It's something outrageous, and it just keeps going up. So what we do is we track all of these different markets. And so if somebody's like, hey, I like gold and I like to add to my gold position, but I don't want to fool with the stock market, then I get it. And I think trend trading is still valuable to that person because he can look at a chart and he can see when a good time to add is. And there's actually a good time to add, and then there's a better time to add. And then sometimes there's a bad time to add to your position. And so just by being able to have a basic understanding of the chart and how trend trading works, you can improve your commodity investing. You can improve your long-term investing. But no, you don't have to like the stock market, and you don't have to believe any of the bozos on Wall Street. But you certainly do need to have a basic understanding of how the market works, and you do need to have a basic understanding of how to read a chart. And it takes some time. Don't get me wrong. I don't want to make it sound easy. I've been trading for more than 20 years, and I learn new things every single day. So I don't want anyone to think that I'm suggesting that anyone can become a trader overnight. It takes time. We have members who have been with us, and we do a weekly coaching call for all of our members on video, and we show charts and explain how to trade. When we go through, we answer questions and whatnot. And there's been members with us for 5 or 6 years who are just now kind of getting to the place where they're really saying, hey, I'm kind of flying solo here and making really good money. And sometimes it can take that long. But yeah, I mean, if you're gun shy about the market and you're worried about the future, then you're in good company. That's where we are too. We just simply understand that if the market implodes, we can make money from that. We don't want to miss out on that if we understand how to do that.
Now, as for like sectors, do you enjoy like trading the stock market more, or like commodities, or are there specific sectors that are better for trading?
Well, no. Yes, and there's actually a yes and no answer to that question. First of all, generally, no. There's not really one that's, I would say, better for everybody. But I would say that there is one that's right for individuals. In other words, what I teach a lot of our members to do, and what I teach anybody who wants to learn how to trade to do, is to drill down and focus upon your understanding, upon your education, upon your experience, upon your what you're attracted to, what the things that you're interested in, your interests, your hobbies. Basically identify what you like and what you're good at, and then you can apply that to when it comes to the sector or to the industry. So if you're really into, for example, geopolitics, then trading oil or gold, can be a real, or, there's several other things you can trade as well, would be maybe something to consider. If you're really into technology, maybe you're a computer engineer or something, and you know all kinds of things about the cloud and cloud computing or whatever, well, put that to use. And you can actually go out and a lot of lingo that many people wouldn't know, and you can read about different up-and-coming companies. And when you know how to trade, you can be very, very successful with that. And for example, we have several different types of members. One of our members is a pharmacist, and so he sees we have several pharmacists actually who are members, but one of our pharmacist members, he sees all of these different drugs all the time. He works at a major pharmacy. And so, he knows all the new drugs. He knows which ones are moving. He has lots of information about the pharmaceutical world because he's a pharmacist. And so he likes to focus, guess what, on pharmaceutical stocks. And so that's kind of his pet industry. And he has a few others as well. So I think it really depends upon what you like and what your interests are and what your experience is and what your education is in. And there's so many things to consider, but we really encourage individuals to identify a trading or investing niche, because once you begin to drill down to a niche, then you can really track your stocks and ETFs a lot easier. And, it makes it a lot more easy to become successful.
Now, what about for cryptocurrencies? Does trend trading work as well there? Because I know often they're very volatile, so you might have, greater swings in that sector.
It's so ironic. Yes. So for example, our trend trading software allows you to type in any cryptocurrency. Well, I think the top 100, not any, but I should clarify that about the top 100. So you can type in Bitcoin, Litecoin, any of these different ones and see whether they're in uptrends or downtrends too, which is really cool. And a lot of people like that. I'm a big cryptocurrency investor. I mean, I started investing back in 2013, and I have about 5% of my total investable assets exposed to cryptocurrencies. But ironically, and even though I'm a trader, I just don't really trade them. And it's not something that I really am attracted to, because my niches tend to be more other kinds of sectors and industries. And although I understand quite a bit about cryptocurrencies, and of course I understand them because I'm invested in them, I don't really have the stomach to spend time trading those. And that's a classic example of really trying to focus in on your particular niche that you really like to follow and track. So I like cryptos. I certainly have, built a portfolio of cryptos, and I enjoy the space. But I'm more of a longer term investor in that space. So I take a different approach. But no, you can trade cryptos. And in fact, if you really like to follow cryptos and it's really kind of the market that you like, then you can be wildly successful by trading them if you know what you're doing. But of course, as you well know, you could just as likely you could be a total failure, because those things move so quickly. And you have to decide, do I have the temperament for that? Does my personality match that kind of drastic movement in prices? And so I would say most people aren't really cut out to trade cryptocurrencies, but some people inevitably, will find it enjoyable and will do it. You certainly can. I just personally don't.
So, Jerry, one of the things that, people will have to do if they're interested in getting into trend trading is choosing a broker. So how do people do that?
Sure. Well, it really all depends on what you're looking for. Over the years, I've used many different online brokerage trading platforms. I've used Scottrade. I remember using Scottrade a lot when I first got started. I've used E-Trade. They're known for really good customer service, fast trade execution speeds. They have really powerful educational resources, especially for new traders. I like TD Ameritrade. Also, they've been good to me over the years, but I think it all really depends. Like if you're wanting to trade Canadian stocks, for example, and you live in the United States, then you would want a company like say Schwab or Fidelity or Interactive Brokers. I mean, those will allow you to be able to trade very easily Canadian stocks, right here from the United States, and as well as other global stocks. And then some people say, I'm really conscious about commissions. And for those, I would suggest, that maybe they take a look at something like Robinhood. Robinhood is a relatively newcomer to the online brokerage world, but what makes it so unique is that it allows its customers to buy stocks and ETFs without a trading commission. And of course, you get what you pay for. I mean, so because it offers zero commissions, you're not gonna have as a robust experience as you would maybe on one of the other brokerage firms' websites. But Robinhood does provide free commission-free trading. And there are a few other catches involved as far as like how it works and what you can actually invest in and things like that. But those are the ones I would mention. I've used E-Trade for a long time. I certainly am not recommending any of them. I think you should do your due diligence. And I want to say that broadly here is that everyone should do their own due diligence when it comes to the stock market. Don't take advice from me, and certainly I'm not an investment advisor, and don't do your financial planning on YouTube. I mean, you sit down with a trusted financial advisor, talk with a brokerage firm, ask your questions to a professional before you do anything.
All right. Well, Jerry Robinson, thank you so much for joining us today. I guess before we let you go, did you want to share with the viewers where they can find you, where they can maybe learn more about this? I know you have, a program for trend training. If you want to discuss about that and where people can find you online.
Well, sure. And the main thing we want to do is just tell people about our website, followthemoney.com. And we actually created 3 completely free welcome gifts to anybody who signs up on our website. You just go to followthemoney.com and click or followthemoney.com/email. And you just sign up for our email list. And when you do, we're going to give you 3 really powerful things. We're going to give you my top 10 trading rules. So if you're interested at all in trading and you kind of want to know a little bit more about what I'm talking about, you can go to followthemoney.com/email. Just enter your name and email, and you'll get our top 10 trading rules. It's a really nice special PDF report that you can use to learn about trading. We also are going to give you a completely free hour-long video that I did at last year's Follow the Money Summit, where it's 12 lessons from the world's greatest stock traders. Very, very powerful video that'll really help you understand how we trade, but also how the greatest traders of this last century have traded. And then we also, for those who are concerned about the U.S. dollar, we have a PDF. It's about a 50-page PDF on the preparing for the collapse of the petrodollar system. So when they go to our website, followthemoney.com/email, they just enter their email there, join our community for free, and they'll get those 3 welcome gifts all right there. And of course, if they're interested in our services, they can learn more about that too on our website. But I would encourage everybody just to get all of our free gifts we're offering, followthemoney.com/email, and download your 2 PDFs and get your hour-long video and just check out trading and see what you think. I think you'll find a lot of value in these welcome gifts we're providing.
All right, Jerry Robinson, thank you so much for your time today.
My pleasure, Elijah. Best of luck to you. Thank you for having me on.